Now that we completed the general journal, we need to do our general ledger. All the titles are very similar. That's why it's very important to make sure you always have an account title. Now you'll notice that we have an account number and an account name. You must always include those. So now I'd like you to make sure that you have both the general journal open and your general ledger. And what we're going to do is now we create something similar to the T accounts, but a little bit more legible, hence ledger. So we go through all our general journals. Cash, now we're going to write reference number 101. If you look here, that's where we're getting the reference number. And we're going to reference, this was general journal page 1, J1. We record the date, and it's always for 1 month, so January 1st. And we debit 10,000, and we debit 10,000. Next, we go and we have to find our capital account. And everything is in number order. So you have to go through and find, oops, did I go past it? I think I did. The capital account, account 311. It is a credit. It's from the general journal, page 1. Over here, you'll notice that we have a debit and credit for each transaction, and then we have a running total. So again, now transaction 2, rent expense and cash. We'll start with the cash account because we know exactly where it is. And here you'll notice we credit cash by 500, still on journal page 1. Journal page 1, credit. Now, a credit decreases our account balance. So we started with 10,000 and now we have 9,500. Rent expense, and make sure that we're always putting our account numbers. We know that this is 521, so we can rush down and look for our 521 account, which all 500s are our expenses. You'll notice all the expenses are 500 and something. January 15th. Oops, nope. Which fees was it? Was it advertising? Rent expense. So here's our 500 account. 521. January 1st. Journal page 1. It's a debit of 500, and we bring the balance over. And we're going to do this for each one. Office supplies, account 142, debit 300. Office supplies, journal page 1, debit 300, and now we have a balance of 300. And we are going to go through this for each one. All we are doing is now creating, going back and forth. And remember, whether the debit increases or decreases, your account makes an effect. So cash is usually the account that we use most. And you will see we have a debit and credit balances for each transaction and a running total. Now we're going to use, these are our balances. A debit balance of 10,021. And we will use all the balances for all the accounts to create, oops, our trial balance. Now, always put the account title, the financial statement that you're working on, and the date. Make sure you list the account number and the account balance. If it's a debit, or a credit balance, and you list it in account order. All our debits must equal all of our credits. So we list each and every one of our accounts from our general ledger. Next, we need to create the income statement. Again, we name the company, income statement, and what month is it for. The income statement only has revenue and expenses. So we have to list our consulting fees and all our expenses. And if you notice, our consulting fees are the 400 accounts. So if we had different services, we would have all the 400 accounts for our revenues and all our expenses. So from here down is truly our income statement. And here we are, we're making it just a little neater, listing what is revenue and what is expenses. If our revenues exceed our expenses, we have a net income of $321. If our expenses exceeded our income, we would have a net loss. You never want to have a net loss, obviously. Next, we have to have the statement of owner's equity. And the only thing that should be included here is our capital and our withdrawals. And we take our net income for January from our income statement. That is why it's important to do your income statement first and then your statement of owner's equity. We had no beginning balance. We add in our investment of $10,000. Now we have a total investment of $10,000. Our net income for the month of January is $321. We withdrew in January $100. A withdrawal is a decrease. So we net $321 and $100 to give us an increase in capital of $221. Now we need to know our capital for the end of January. We take our beginning balance, add our increases in, and now we have a balance account, capital balance of $10,221. Now again, make sure, some of you forgot this during your exam, you lost a point or two. You include the consulting company's name, the fact that this is a balance sheet, and for the month ending. This is where we're going to take all our assets, our accounts payable, our owner's equity from here, $10,221 for our total capital, and make sure that we are in proof. And we are. And that's all this question requires of us. If you have any questions, please contact me. Have a good day.